Why Elon Musk thinks Rivian won't succeed. Elon Musk stamps these huge EV startups as doomed. The CEO of Tesla claims that his much smaller competitors Rivian and Lucid are going to fail unless they start cutting costs quickly across the board. Welcome back to EV Scene. In today's video, let's find out what these contentious remarks may have for us. But before getting into the video, share and subscribe to our channel for similar and interesting content. Also tap on the bell icon for notifications. Without further ado, let's get into it. In an interview with the Tesla Silicon Valley Owners Club, Tesla CEO Elon Musk said that two US-based electric car firms, Rivian and Lucid Motors, are both headed for bankruptcy. Elon told investors in the firms if their direction is not changed, two electric car startups could both wind up in the graveyard of failed businesses. Musk stated, "My advice to Rivian would be to cut costs immediately across the board, dramatically, or they are doomed." Additionally, he made a statement on Rivian raising the price of its electric vehicles earlier this year and pointed out that when you raise the price, you exponentially lower the amount of people who can buy the vehicles. Moving on to the next segment of our video, so who are these companies? Lucid. This luxury electric vehicle maker is known for the fastest charging EV on the market. Lucid Group has been trying to compete with Tesla by offering luxury electric vehicles. The company recently announced that in 2022 it exceeded its own expectations by manufacturing 7,180 automobiles as opposed to the 6,000 to 7,000 vehicles that were first anticipated. It's important to remember that owing to supply chain and manufacturing challenges, Lucid originally lowered their 2022 EV production target back in February. The share price of Lucid increased by over 30% in 2023, despite the fact that its stock is down roughly 79% from a year earlier. The technological superiority and the high demand for their automobiles justifies the claim made by Lucid CEO Peter Rawlinson that we remain confident in our ability to capture the tremendous opportunities ahead. However, with Musk cutting costs, there are concerns among other EV manufacturers that they will have to match Tesla's pricing cuts. This is making Lucid's investors worried about price cuts and delivery problems. Moving on to Rivian. Rivian Automotive was more valuable than Ford and General Motors when its shares closed at an all-time high of $172.01 in November 2021. However, with a market worth of $14.5 billion and a share price of roughly $16, Rivian is now trading for less than 3 times its 2023 sales forecast. Investors' concerns regarding its slowing growth, supply chain issues, and ongoing losses caused its shares to plummet. Rivian produces 3 different electric vehicles: the R1T pickup truck, the R1S SUV, and an electric delivery vehicle for its principal investor, Amazon. Because it had to battle with several supply chain restrictions, it produced 24,337 automobiles in 2022, falling short of its own goal of 25,000. Even after that, Rivian's management is certain that despite these obstacles, the firm can produce 1 million automobiles annually by 2030. Counting from 2022, that would imply an enormous 8-year compound annual growth rate of 59%. Rivian's revenue would rise from $1.8 billion in 2022 to about $75 billion in 2030 if it increases by the same compound annual growth rate. If Rivian trades at 14 times revenues by then, it may surpass the $1 trillion barrier and provide its present investors a return of over 70 times their initial investment. If this happens, it would be very similar to what happened with Tesla. In October 2021, Tesla reached the $1 trillion threshold. Tesla was valued at 12 times its projected sales for 2022 on that fateful day, but at this moment, Rivian can only speculate. Although Rivian's long-term plan is promising, it is anticipated that it will continue to be incredibly unprofitable for the foreseeable future. Analysts forecast $5.3 billion in sales, but a $6.4 billion net loss for the company in 2023. They also forecast $10.8 billion in revenue and a little smaller $4.5 billion net deficit for the company in 2024. Hence, while Rivian has a possibility to follow Tesla's development track and enter the 12-0 club by 2030, the likelihood is low. Rivian would need to produce 1 million vehicles flawlessly each year, in addition to persuading investors that it deserves to trade at a double-digit price-to-sales ratio, which might be challenging. But even after taking all these facts and figures into account, we must first consider Tesla's performance before drawing a conclusion. Tesla has released their 2022 electric vehicle delivery statistics. In the fourth quarter, the corporation manufactured 439,701 vehicles and delivered over 405,278 automobiles. Vehicle manufacturing increased 47% compared to the previous year to 1,369,611 units, while vehicle deliveries increased 40% to 1,313,851 units. The most significant Tesla news is the recent price reductions. The Model 3 is now costing less in China than NIO's ET5 midsize car. Tesla's version costs $33,000, but a comparable vehicle from NIO costs $45,000. Furthermore, Tesla has begun production at 2 new factories this year, one in Austin, Texas, and the other in Brandenburg, Germany. That's a huge development. So Musk can indeed suggest other companies. However, the problem with his view is that, having just launched deliveries toward the end of last year, the duo are in the unenviable position of needing to weather the current winds of stagflation before they have scaled up production at their factories. Bankruptcy itself does not need to spell the end of a company. Products of both the companies are getting people excited, and they are now focusing on ramping those products up while reducing the cost. Yes, it is something to keep an eye on, but Musk's doom comments are very similar to the naysayers' comments that frustrated him a lot when Tesla's was in the same growth phase. Also, despite growing concerns about an impending recession, it is still extremely rare for a CEO to openly warn about the dangers to his or her rivals for 2 main reasons. Reputational impacts come first. Any criticism can be seen as impolite and perceived as driven by the CEO's personal interests. Additionally, executives would rather spend their valuable interview time discussing the merits of their goods than praising or disparaging competitors. Financial dangers come in second. A warning that Rivian and Lucid may go under might frighten away both potential investors and lenders who supply equity and loan financing, especially in a down market, coming from someone as knowledgeable about the electric vehicle sector as Elon Musk. We may also doubt Musk's vision, keeping in mind that, although both businesses are still in their infancy, Musk's much larger, more seasoned business is nonetheless at risk from them. With a range of 517 miles on a single charge, Lucid's Air sedan comfortably defeats Musk's Model S and holds the record for the greatest range on a single charge of any U.S. EPA-rated car currently on the road. And the critically well-received Rivian R1T pickup easily beats Tesla's Cybertruck in the market. This prompts critics to doubt Musk's intentions. However, is Tesla's CEO really wrong? Both startups are now having trouble, partly as a result of part shortages, production problems, and launch delays. Lucid shares have lost more than 60% of their value from their January peak. Additionally, Rivian momentarily enjoyed success on the stock market when it raised $12 billion in the largest IPO of 2021, but its fortunes swiftly declined after that. Strategic and financial supporter Ford abandoned a collaborative venture in favor of a go-it-alone strategy. Amid the chip crisis, chip makers preferred to distribute their limited supply of highly sought-after chips to other automakers. And Amazon started striking arrangements with rivals like Stellantis for electric delivery vans. Perhaps more concerning is that, even while Rivian and Lucid lack scale and have manufacturing that is only a tiny portion of Tesla's, their expenses can occasionally be just as expensive. For instance, Rivian reported $2.1 billion in operational expenditures for the fourth quarter, whereas Tesla recorded at $2.2 billion. In my opinion, the key distinction is that Rivian is carrying it out on a larger scale than Tesla. Even while it was still losing money overall, Tesla managed to generate a positive gross margin on its vehicles by the time it began shipping thousands of them each quarter. On the other hand, Rivian is facing loss literally on every vehicle it produces. So yeah, I'll end with the remark that, even if declaring these golden startups hopeless is pushing it a bit far, Elon is largely correct. What are your thoughts about it? Are these two startups actually doomed? Do let us know in the comments. To watch more interesting stuff, you can click on the video recommended at the top of your screen, or wait till we're back with more exciting stuff. Till then, bye-bye.